Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. We've spoken a lot on the podcast about infrastructure. There's been a huge amount of investor interest in it this year, with some significant deals being done. I wanted to look more closely at what's driving the rush and, more importantly, what the future holds. Peter McGregor is the co-founder of True Infrastructure, an unlisted infrastructure fund manager launched last year. He's the former head of infrastructure and utilities at Goldman Sachs JB Weir and former CEO of the Australian Infrastructure Fund. Peter, welcome to Fear and Greed.
Hi, Sean. Thanks for having me.
So just tell me about True Infrastructure. What do you do exactly?
So thanks, Sean. As you mentioned, we launched the fund late last year, and it's a fund of funds designed for wholesale investors. So our target investor market is larger, sophisticated individual investors, self-managed super funds, small family offices, and we invest via a range of managers into the infrastructure sector. And really the business model is about giving investors that traditionally have struggled to find exposure to high quality unlisted assets in the sector the opportunity to invest in assets that, traditionally have really been limited to only being available to institutional investors.
Okay, so what sort of assets are you talking about? We know the listed ones, Sydney Airport's obviously a big one, and that's had a takeover bid from the super funds recently. But what sort of assets are you talking about?
So we're across a range of assets and a range of sectors. Our name, True Infrastructure, is an abbreviation of transport, renewables, utilities and energy. And those are the four subsectors we're invested into. So the largest sub-asset class within our portfolio is renewables. We're a very significant wind farm investor. We also invest in a range of utility, power generation and transport assets, particularly in the seaports sector.
Okay. So just before we get into those transport, renewables, utilities and energy and where you're going down that greener path, what is it about infrastructure that attracts investors at the moment? Why is it such a hot asset class?
Great question. Look, it's a hot asset class for a couple of reasons. One is there is, I think, a growing recognition that this is an asset class ideally suited to the superannuation market and the superannuation funds, be they the larger institutional superannuation funds or individual self-managed superannuation funds. And that really reflects the fact that superannuation funds, by their nature, have a very, very long-term liability profile. They exist to pay out their beneficiaries over a very, very long period of time. So the nature of infrastructure as an asset class, which is all about very, very long-term, low volatility, defensive growth profile, just fits really, really well as an asset class to match those liabilities for superannuation investors. So that's been driving a lot of demand. The other issue that's really starting to emerge as a theme, of course, is inflation in the Australian marketplace and globally. And again, by their nature, infrastructure assets, as a very, very general statement, often have a significant inflation hedge built into them via their revenue streams.
Okay, so just breaking that down, what you're talking about is that often these are government-regulated income streams to some extent, and some of those, of course, are linked to inflation. Is that kind of what you mean by that?
That's absolutely right. Whether they be regulated or whether they be subject to long-term contracts, generally there will be an inflation trigger in those revenue streams. So, for example, if we look at our own portfolio, in excess of 90% of the investments in the portfolio have some form or another of inflation hedge within their revenue streams.
Okay.
So that provides a very, very effective mitigator against the risk of inflation, which obviously has and can have a significant impact on certain asset classes.
Okay, so bringing you back to True Infrastructure, transport, renewables, utilities, energy, green infrastructure certainly seems to be flavour of the month and perhaps the year and perhaps the decade. And if you look at what sort of outside the infrastructure, what BHP did last week, for example, what some of those big global oil and gas companies are doing to become greener, and then certainly around the big super companies trying to take over Sydney Airport, that area that you're working in, why is that so important at the moment?
Yeah, look, again, great question. At the end of the day, I think there's a recognition that the world is changing. And I know that's a very, very big statement to make. But at the end of the day, people are looking for investment portfolios that are very, very forward-looking and take advantage of future opportunities. And there is a recognition that going forward, investment in renewables is going to be both an enormous opportunity and also a very, very significant sort of underlying factor in the broader economy. So we see amongst our investor base, a real desire to get exposure to high quality renewable energy assets. And in fact, we see our portfolio evolving over time to the point where, as I mentioned, it's currently the largest subset within our portfolio in terms of the four sectors I talked about. We see that growing very, very significantly going forward to the point where, we expect longer term down the track, our portfolio to be very, very significantly invested in the sector.
So you mentioned wind farms. Is that a big business in Australia, wind farms?
Look, it's big and it's growing. It is certainly the largest of the various different renewable technologies in Australia. We see ourselves as being, in a sense, technology agnostic.
Yep.
That for us, it's really about the risk-return profile, the structure of the contracts, the counterparties, those sort of considerations, as opposed to the technology itself. But we've found historically the wind farms is where the opportunities have been. We're starting to see an increasing range of opportunities across the solar space and across the batteries and hydrogen space. Mm-hmm. But in some ways, it's early days with those technologies, and wind farms are certainly where the opportunities have been historically for us.
When you have the Andrew Forrests of the world spending so much money in hydrogen in his instance, but into renewable energy, it must give the whole sector a bit of a kick along.
It does, absolutely. And it shows great leadership, I think, because, again, it's early days for that technology in many ways.
Yep.
And I think the more investment into that sector, the more it effectively becomes self-fulfilling. The more there is investment in the sector, the more there'll be opportunities to invest in the sector.
Stay with me, Peter. We'll be back in a minute. My guest this morning is Peter McGregor, the co-founder of True Infrastructure. Okay, so we have the renewables. What you just said about what True does and where your expertise is around the contracts, the financing, the valuation, that type of area.
Yep.
I want to invest in green. Personally, I think it's a great option to do that. And I can go and, invest in battery metals companies like Orocobre and Pilbara and those sorts of things. I think infrastructure is a great play for all the reasons you've talked about. The thing I'm scared about is, how do I know whether there's rigor around contracts? How do I know whether actually investing at that valuation is worth it or not? And I suppose that's the sort of discipline you're bringing to it.
Look, it is. We're also very, very focused on investing at the lower risk end of the spectrum. I mean, there's obviously a whole range of potential contractual arrangements that range from the investor bearing the full, what we call merchant risk, bearing the full risk on both demand and price. At the other end of the spectrum, and this is where we sit, it's really about the counterparty to the offtake agreement taking effectively that demand and price risk. So in essence, our focus is on investing on assets where that risk is taken by the counterparty rather than by us. So we get a very, very low volatility revenue stream as opposed to being exposed to movements in the market price or movements in demand and output.
Okay. And so what sort of people I know you've told us who True Infrastructure is targeting. Are you getting many of those self-managed super funds and high net worth individuals that are interested in the asset class and getting involved?
Absolutely, yeah. And look, it's early days for us, but we've been very, very pleased with the demand so far. And as I say, the whole renewable theme and an ability to tap into that growing asset class really seems to have struck a chord with the investor base. And we're very, very pleased with how the fund's gone so far, both in a performance sense and a fundraising sense. And, we're looking forward to that continuing.
And of course, the $64 question is, what do you think global inflation is going to do? Because as we started out, you explained that infrastructure is very important when you think you're in an inflationary environment. What do you think is going to happen?
Yeah, really, really great question, because it's a real talking point at the moment. Look, there's no doubt right now that inflation is real. We've seen that in the most recent quarterly CPI data, which indicates inflation's running, I think, at 3.8% in Australia at the moment, which is certainly the highest it's been for a long, long time, pre-COVID. The big question is to what extent that's a re-emergence of structural inflation in the economy versus whether it reflects some sort of short-term supply chain issues, predominantly related to COVID. And my sense, to be frank, is it's more the latter, that I do think post-COVID, when we move back into a more normal world, I don't see signs of inflation being a material longer-term problem, but I do think for the next 12 to 24 months it's going to be a reality, both here and globally.
And just a very quick one before I let you go, Peter. I've certainly spoken a lot about, and you read a lot about the Joe Biden's infrastructure package, which was, a US $1 trillion. There was a massive one last week out of India. I think it was $1.35 trillion over a decade or something or other. Those sorts of packages, do they make any difference? Can you invest overseas, I suppose? Can you take advantage of those sorts of things? Does it actually end up having a flow-on effect in other parts of the world when all this money is going into infrastructure? I'm just wondering whether that has any effect really on Australia.
So I think the effect on Australia, to be honest, is more indirect.
Yep.
At the end of the day, our mandate allows us to invest internationally, and we have a small part of the portfolio invested with Atlas Infrastructure, who are a global infrastructure securities investor. We think, the core portfolio, which is predominantly invested through Infrastructure Capital Group, we think the pipeline of opportunities in Australia is enough to keep us occupied in the medium term.
Yep.
But having said that, I do think we are clearly moving to a point of global alignment on the need to address climate change and the need to put in place globally consistent policies to address the issue. And ultimately, that's positive, and we think will drive further opportunities both domestically and globally.
Peter, thank you for talking to Fear and Greed.
My pleasure, Sean. Thanks again for having me.
That was Peter McGregor, the co-founder of True Infrastructure. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.